Today, I'm going to show my best credit spread strategy, how you can place them yourself. I'm going to explain in depth, how to do it exactly, even if you know nothing about credit spreads. Then I'm going to show you the credit spread trade of the year that you can place right now on your broker. This trade is going to net me somewhere around $7,500 in profit. I believe it to be a fairly safe play with good risk to reward return. Alright guys, so the type of trade that we will be doing is a put credit spread on NVDA. If you don't know what that means exactly, don't worry, I will explain it in a couple minutes. But I do want to preface this by saying that NVIDIA is my third largest holding in the hypergrowth portfolio. This is my SCOA hypergrowth portfolio that I've been trading since inception. It is up 70.43%. while the S&P 500 is up 6.29%. There has been quite a pullback in the portfolio along with the S&P 500 from the highs in February. Now I'm going to show you exactly how to place this trade and how much we stand to make. The first thing that you're going to want to do is go to the expiry date of the option contracts. Now I'm going to do May 16th. This is pretty far out. NVIDIA is currently in quite the dip and I'm not sure when it's going to be done, but I assume it'll be before May. And I don't think it's going to dip too much further. However, if it does, we have a plan. I'll explain that in a second. Now, what we're going to be doing is a put credit spread. So you're going to want to change from buy to sell. Then you want to go from call to put. Now, we're going to be selling the 115 put. Now, if you don't know what exactly that does, someone out there is trying to buy a 115 put. Now, if we actually sell the put, they are practically giving us the money so that they can have that put. However, that's quite a lot of risk, right? That's a lot of risk to take on. So what we're also going to want to do is go from sell to buy and buy a 110 put. This is pretty much like a safety net and we'll get the credit from in between premium prices. So we get $10.10 minus $8, which would be $2.10. However, that's not quite accurate, from the bid and ask spread. So we just click continue. And we'll see here that our estimated credit is about $225 per spread. Right now, as I'm recording this, my plan is to take about 20 spreads. I still have cash on the sidelines to take more if NVIDIA continues to go down. So for us to actually get this amount right here, right, this is how much we stand to make. We need NVIDIA's share price to close above $115, right, because this is our sold strike. We need the share price to close above $115 on May 16th. So what happens if NVIDIA's stock price goes down? Or what happens if we're close to May 16th and NVIDIA's price is below 115? Well, there's multiple strategies that you can employ. So one thing that I like to do is something called rolling. We can change our strike prices from May 16th to maybe June or July. And what this will do is give us more time, give the stock more time to get above the sold strike. And usually when you roll, you take a little bit of a hit on credit. However, the worst case scenario that could possibly happen, such as NVIDIA's stock price going to literally $0 per share, the most amount you could lose is the difference between your strike prices minus how much credit you get per spread. So the difference is 115 minus 110, which would be 5, minus 2.25, which would be 2.75, which would be $275. The most you can lose per spread would be $275. Now I'm going to talk about why I believe this credit spread is the credit spread of the year. If we go to Koifin and we take a look at some of the valuation metrics on NVIDIA, we can see that the forward PE is currently 25.8. Right, this is NTM, which means the next 12 months, which calculates the forward PE. So if we actually open the graph with the forward PE, we can see NVIDIA's forward PE is currently tanked after earnings, which is a good thing because that means that it's relatively cheap. The lowest that NVIDIA's forward PE has been in over 5 years, which is in December of 2023, was 24 times. Now NVIDIA is currently at 25.8 times. So it's almost at the cheapest valuation that has been in almost 5 years. And what this does is give us a good risk to reward, right? We don't have a whole lot to lose, but we have a lot to gain. Some further reasoning as to why I'm bullish on NVIDIA is if we take a look at the Fear and Greed Index. Currently, we have a score of about 18, which puts us under the category of extreme fear. Now, NVIDIA is one of the world's largest companies, so if SPY and QQ go up, NVIDIA is probably going to follow as well. You know the saying, buy when others are fearful, sell when others are greedy. So if we take a look at the timeline, the last time that we were in the extreme fear category was in August of 2024. That's when we had a score of 17. And if we take a look at the SPY chart, that was this dip right here. Right now, imagine if you bought this dip, right? You would be up quite a lot of money. Now, this is a similar situation. Though I could see SPY coming down to this area, I think that now is definitely a good time to start buying. Now, if you want to see more about why I'm bullish on NVIDIA, I made a video literally just yesterday as to why I think it's a great investment right now. If you enjoyed this video, please subscribe. Feel free to leave a like. I will see you all in the next video. Peace.